What's up? What's up, my mind, your money business folks? It's me yet again with another video. I just woke up, as you can see, or maybe you can't see, but either way, I just woke up. And so today, I want to talk about the stock market leading into the holiday. Tomorrow it's Christmas here where I'm located. It's going to be tomorrow for those of you located in the United States of America. But the stock market was up today and I made some money. Even though it closed early at 1 p.m. Eastern Standard Time, I woke up and I was in the green and I went back to sleep. So let's get into it. It says here, the stock market surged and start to Santa Claus rally ahead of Christmas break because the stock market will not be open on Christmas Day, right? So it says here, U.S. stocks rallied in the final shortened trading session before the Christmas holiday. The benchmark S&P 500 finished the session up over 1.1%, while the tech-heavy NASDAQ composite rose roughly 1.4%. The Dow Jones Industrial Average climbed above 0.9% or around 9.9%. So Wall Street successfully entered its Christmas break rejuvenated after tech stocks, including AI chip giant Nvidia, the big kahuna, that word, Nvidia, led the march higher. Markets close, of course, at 1 p.m. and are off tomorrow for Christmas Day, but it will open up on December 26th. So sizable gains in the past 3 trading sessions have put the indexes back on the path toward their record highs, from which they took Fed fuel nosedive last week. You know, the stock market didn't do well last week, but on Friday of last week, things were good. And then things were okay Friday. Then there were gains yesterday, and then today, more gains. So it's like all the losses that took place before Friday and these 2 days have been gained back. Yep, been gained back. So it says here, Wall Street is reassessing the path of interest rates next year as it grapples with the reality that the Fed mostly pulled off a so-called soft landing, but could fully shake the U.S. economy's inflation problem. According to the CME Fed Watch tool, most bets are on 2 coming holds at the Fed's January and March meetings, followed by a toss-up in May. Okay. Meanwhile, many eyes continue to be trained on Nvidia, which ticked up again Tuesday after a 3.5% gain on Monday. As Yahoo Finance's Don Howley writes, 2024 was Nvidia's year, with the stock up some 180%. But 2025 could contain plenty of challenges. And I will say, next year things are going to be interesting. I would say every year in the market is interesting. There is no year that is perfect. You're going to have your ups and your downs. You're going to have gains. You're going to have losses. That's why you have to dollar cost average into the stock market. You have to budget. Again, you need to look at investing as this is money you can afford to lose. You can have your emergency fund. You can have no debt. You can have your home paid off. You can be living below your means. So all is well regardless. Right, I have my own individual 401k plan. I have my individual stocks. I have my emergency fund. I have my rental income coming in. So, you know, I have things in place. And so that's what I, advise you all to do is get things in place. Have a plan. Create a plan. Start working a plan. Lower your debt to income ratio. Start living below your means, people. Live below your means. So let's see what the stock market did today. My information technology ETF, FTEC, closed out on highs today at $191.64, gaining 1.07% for the day. Apple closed out at $258.20 a share, up 1.15%. Broadcom closed out at $239.68, up 3.15%. Palantir Technologies closed out at $82.38, up 2.09%. Tesla closed out at $462.28, up 7.36%. I did not expect this from Tesla. I really did not expect this from Tesla, people. I'm not lying. I've made a lot of money on Tesla. My Tesla stock, I looked at it today, is up 116%. I was dollar cost averaging into Tesla every month, buying shares of Tesla every month, and it has really paid off. My return on Tesla is pretty good. That's why you have to be in the market, people, and not try and time the market. You cannot time the market. I did not see Tesla gaining this much in such a short amount of time. Tesla has gone 100% return since November, I'm sorry. Since President-elect Trump won in November, Tesla has skyrocketed. It has doubled. Like I said, I'm up 116% on my investment. SPLG, my S&P 500 ETF, closed out at $70.94, up 1.05%. And this is what I want to say about my S&P 500 stock, right? My S&P 500 stock, or ETF, consists of the 500 largest companies, the 500 largest successful companies in the United States. Now, I do have Apple stock. I have Broadcom. I have Palantir. I have Tesla. I have Apple. I have those individual stocks. But I invest more money into my S&P 500. 50% of my investment goes into the S&P 500. I don't manage the S&P 500. I take more of a chance on these individual stocks. So this is how it works. So my individual stocks like Tesla. Say Tesla just takes a nosedive and goes to zero. I lose all of my money, right? I understand that because, nothing is 100%, right? So if Tesla goes under for whatever reason, if I had all of my money in Tesla, I would lose all of my money. But I don't have all of my money in Tesla. I just invest a small percentage of my monthly budget into Tesla stock. But 50% of my overall investment budget goes into S&P 500. S&P 500, again, is the 500 largest companies in the United States. And Tesla is a part of the S&P 500. Apple is a part of the S&P 500. NVIDIA is a part of the S&P 500. So, again, I personally take the chance in buying individual stocks where I'm telling myself, okay, I'm going to be the expert, right? Doing my research, paying attention to reports, financials, so on and so forth. But when it comes to the S&P 500, whoever the fund manager is, manages that fund. They are the experts. They're the ones that are moving companies in and out of the S&P 500. Say Again, say Tesla goes under. The fund manager will simply remove Tesla from the S&P 500 and replace it with another company that's doing just as well. That's doing just as good. Well, that's doing good enough to be amongst the top 500 companies in the United States. But again, if I had all of my money, 100% of my money into one single stock, like say Tesla, Apple, Nvidia, Johnson & Johnson, if that company goes down, I lose all of my money. So I diversify my portfolio. And my individual stocks are doing just as good as my S&P 500 ETF and my information technology ETF. My information technology ETF, FTEC, consists of almost 300 technology companies. Apple is a part of that. Nvidia is a part of that. Microsoft, Google, they all are part of these ETFs to where I do not have to be the expert. But if I want to invest into some of these companies individually, I can choose to do so. I just dollar cost average into that stock if I want to pay the money for it and move on. Like Tesla is starting to get a little more expensive. So like I like stocks that are under $200 to invest in. And now Tesla is over $400. It's $462. So will I continue to invest money into Tesla individually? I don't know. But that's something that I have to think about, right? I'm gonna have to do some reevaluation of my portfolio and figure out what I am going to do. Because I believe Tesla will continue to grow. Because Tesla, if most people don't understand, is more than just an auto manufacturing company. I believe Tesla's going to expand. They have SpaceX. There's a lot that I believe Elon is going to do with the company. So yeah, I hope all that makes sense. So please, I said all that to say this: diversify your portfolio. If you do not want to diversify your portfolio, just invest in the S&P 500, or you can invest into VTSAX. I've talked about that many times, right? And VTSAX is Vanguard's total stock market index fund. And VTSAX, right, closed out at $143.11. Year-to-date return on VTSAX is 23.92%, which is good. So VTSAX covers the whole entire market. It covers the S&P 500. It covers big stock, mid stock size companies. It has about over 3,600 companies packaged into that one fund. It covers the whole. You don't even have to invest in anything else if you don't want to, because it covers the whole entire market to where you don't have to figure out which individual stock you want to invest in. Just invest your money into VTSAX. VTSAX, right? Let me see. It's a good stock, people. It's a good stock. Okay, let's click on my FTEC stock, right? I have a little time, right? Year-to-date returns on my FTEC Information Technology ETF, 33.42%. Let's click on Apple. Apple's year-to-date return is 34.11%. Let's click on Broadcom. Broadcom's year-to-date return is 114.72%. Wow. Nvidia's year-to-date returns is 183.15%, people. SPLG, the S&P 500 ETF that I have, year-to-date return is 26.9%. 26.91%. 26.91%. You will never get that from your bank. By leaving all of your money in your bank, you will not get returns like this. Tesla year-to-date return is 86.04%. Wow. What else do we have? Oh, Palantir. What is Palantir's returns year-to-date? 379.79%. Can you believe that? Can you believe that, people? 52 weeks ago, Palantir was $15.66. Now it is $82.38. That's a big gain. This stock has probably made millionaires, has made people millionaires and multimillionaires. That's why you have to be in the market. Now, not all of these stocks I were in the whole entire year, right? Like Palantir, like I bought Palantir a couple months ago, but I have made gains on Palantir since purchasing it. I think when I bought Palantir, I think it was at 30, I'm not sure, maybe at 30 something dollars a share. Yeah. Or maybe at $50 a share. But either way, I've had gains on Palantir. So yeah, so like I'm trying to get my mind wrapped around not having so much money in the bank. Again, I have more than just an emergency fund. I also call it having, extra money sitting there. So if I wanted to invest and buy more stock, I don't have to dip into my emergency fund to do so. I could just pull money and invest an extra few dollars here and there in a stock, because I truly believe in buying the dip, especially if it's a good growth stock like Nvidia, so on and so forth. But yeah, as long as you have your emergency fund, you don't really need to have a lot of money in the bank. Your money can be in the stock market, bringing back these type of returns, 20%, 30%, 40, 80% in a year. In a year, people. Like, there are a lot of people missing out. But people will spend hundreds of dollars weekly, monthly, buying lottery tickets. But you could put your same money into the stock market and get returns. Of course, you're not gonna, get $10 million from winning the Powerball. But if you invest over time in 20, 30 years of continuous investments, you could have $10 million, at the end, right? So yeah, that is all. That is all. But that's all I want to talk about. I want to go back to sleep, but I'm not. I might go for a walk. All right, so you guys take care. Have a great holidays. I hope you are investing. If you're not investing, you need to start investing. But disclaimer, I'm not a financial advisor, nor am I pretending to be one. Any and all information on my channel and in my videos are for entertainment purposes only, and it expresses my opinion, right? So please consult with a financial advisor before you invest any of your monies, if you're not comfortable doing so yourself. So yeah, on that note, all right, you guys take care. Peace.